Welcome back, or welcome for the first time. Today we're talking about picking stocks and one of the best sources for that information. What I'm trying to show you is how to pick winning stocks all on your own without anybody's help. Let's dive right in. Sorry, I'm just going to be in the bottom screen and I'm going to be looking away from the camera from now on, but I need to look at what I'm actually doing, which is here, not there. Okay, so here we go. Let's dive right in. What you're looking at is finviz.com, one of the best sources for information. It's just loaded with information for traders like you and me, or somebody aspiring to be a trader. And what you're seeing here is their homepage. All right. Um, my favorite tool, well, one of my favorite tools is the screener, but I'll just quickly go through the website and then we'll dive into the content of this video. This is your summary page of everything that you find under news. Mind you, this is information that's free. Nothing needs to be paid to get all of this that you're getting here. These are headlines from different newspapers, all short, summarized in a single page. Screener. This is the tool we'll be coming back to later on and actually picking from bad and good and deciphering which companies are actually worth investing in. Maps. These are heat maps of the entire market, and you can go to any market you want, and it will show you the daily, the weekly, the 5 minute, 1 minute. It's did I mention free? 1 year performance, 3 year performance. So if you click on a 3 month performance, it will give you the return in that period. Red, negative, green, positive. Anyways, groups. You can filter by industry, by sector, by whichever you want. Groups. Once again, performance for the year, for 1 day, for 1 week, and which sectors are outperforming which. This is good to know if you're trying to invest and you're just doing ETFs, electronically traded funds. You can invest in basic materials. And if you're hedging like me, short financials in this case. But if you look at overall, who's been doing the worst, it's real estate, really. Real estate's been doing very poorly. Moving right along, portfolio. If you sign up with these guys, you can actually track your whole portfolio through this website, which is really cool. I've tried it once. I liked it, yet I found a different service which is called Seeking Alpha, and for various other reasons, I decided to go with that service as my source of information. But that's not what this video is about. This video is about showing you a free way to put together trade ideas based on what's available online that you can click on right now and just take a look at it. And I'm not in no way am I affiliated with Finviz. I'm just saying this is a really good source and you should check it out. So let's go back to the previous page there. Portfolio, insider. This is insider trading. So by law, people have to, if a CEO, CFO, chief financial officer, chief executive, or any member of the board of members in a corporation, if they decide to trade, they have to publicly make that information available for you and I. And what you're seeing here is that we could dive into, what's going on with companies that their CEO is dumping their stock or when he's buying it up, what to do, but that's not the topic here. So we're going to come back to that at a later time in another video, and I'll be more than happy to talk about that in more detail. But pretty much you could see the movement of the management's positions. And if they're huge, time to take notice, essentially. Let's look at futures. Let's look at Forex. These are for all those currency traders out there. The crypto. This is, I believe, the economic calendar. And I'm pretty sure you could, take out all the not important stuff and just leave the reds, which is the most impact news, and just follow those. Back tests, and finally you get the pricing for obviously signing up to this website, which I would recommend. This is for the price that you pay. It's a pretty low price actually for what you get, and this is a really good resource. But without further ado, let's dive right into the screener, the tool that I use on this website. And you should play with this website and really get to know it. But the tool that my favorite tool here is called the screener. And a lot of these websites will have screeners. This one's 100% free. It's nothing short of amazing, really. It doesn't have to be um, aesthetically pleasing. It doesn't have to be beautiful. It just needs to work, and this definitely works. So let's click on that. So what you're looking at is a list of companies sorted by name. How do you know which ones are good? You could go through each one and figure out, oh, this stock is going up and that stocking is going up. But then what are you really investing in? And you have to dive in. Once you find something that you like, you're gonna have to dive into the fundamentals and figure out maybe this one's not the best. So why don't we get all the bad apples out of the way using this screener and come out with a short list of companies that we'd actually be interested in investing. And so what kind of companies would those be? Those would be companies first and foremost. If you want stability, if you want predictability, if you want, um, for everything to be less shady than usual or less shady than shady, let's just say, choose a company based out of USA. I'm not against Europe. I'm not against any of the Americas or wherever you're trying to Asia trade. That's fine. I invest in USA stocks because those are the most liquid, and that's where the money's made. And from like just by choosing USA over here, notice the number on the bottom. From 543 pages, we've gone down to 478, meaning all of these left are US stocks. The small fringe minority on the back that just bounced off, it's some EDRs, something that you don't want to even look into. It's other companies. Maybe you do, maybe you don't. I don't care. This is not the video for it. Here I invest only in USA-based stocks because of stability. Now, do you invest in all US companies? Of course not. We would invest only in companies that have a larger market cap. This does not allow you to look at stocks over 1 billion as I normally would like to filter. But the free version, custom, you'd have to actually subscribe to this. But the free version allows you a few filters for that. Anything mega, 200 billion and more, meaning the company capitalization needs to be over $200 billion. Large, between 10 billion and 200 billion. Medium, 2 billion to 10 billion. Small, 300 million to 2 billion. Micro, nano, so on and so forth. My favorite one to use is mid over 2 billion because this allows me to get as close to that 1 billion mark as possible for free on this website. Ideally, I would go with anything over a billion, but 2 is the closest I get over here. So I choose mid over 2 billion without upper cap like over here 10 billion to 200 billion because that was knock out all the magnificent sevens and whatever out there. But we're choosing mid over 2 billion. And look at this list on the bottom. From 478, we're down to 82 companies. Now, what does this mean? We have just chosen some of the most successful companies in the United States. And the list is only 82 pages times 20. Do the math. We're trying to narrow it down even further. This is a long list to go through, and obviously we're trying to look at companies that are actually profitable. They have growth. Yeah, those two really. So moving right along, we go to fundamentals. Fundamentals, I just mentioned growth. The one I like to use the most over here really is EPS growth, so earnings per share growth, quarter over quarter. Year over year is nice as well, but I don't want this to be any specific number. I just want this to be positive. Because when you get too specific, this list gets too small. I want something to choose from. What else I would like to see is the return on equity. This is one of my favorite filters on this. It says ROE, or some people call it return on common equity. It's the same thing. And over here, if you're looking for long, you want something over 15%. And can't stress that enough. These people need to be profitable. and the company needs to be growing, and it shows for itself. So as soon as I click that, our 82 or 80 whatever pages we had turned into 20. We're narrowing it down to companies that we're interested in. Nothing else. I don't want to see anything else. Anything else? Let's see. Earnings per share growth next year. Maybe let's add a little bit more. So we have positive growth quarter over quarter. What are they projecting for the next year? And let's just go make sure that it's positive. Upgrade, Finviz, experience. Of course, they're trying to advertise to purchase this thing. And I have a list of 18, and this is the beginning of it right here. You'll notice like some of the names, Apple, these are the best managed companies in the United States. And you can short them or you can go long on them. But here I'm looking for long, meaning these guys' financials are lining up with what I'm looking for in a company. Would I want to short anybody on this list? Because let's say the company is just going down. No, absolutely not, because there's a potential that this is just a small, uh, adjustment in price or whatever. Uh, the word I'm looking for is just skipping me right now, but whatever the price goes down, corrects a little bit, and then chances are that it's going to go right back up. Why? Because they're still reporting positive. Now you have to dive in a little bit deeper than that in order to choose, but here we're using a simple tool with simple interface. By following these simple instructions, you can choose a company that will return you some money, and it just works. It works. So I have a list of 18. Now, list of 18 things. Maybe what else? Maybe sales quarter over quarter, positive as well. Let's just add to that. And now we have a list of 17. So their numbers should stack up all of a sudden. And if you look, their market caps, they're all in the billions. These are big companies. They're not just going to be, if they get acquired by a bigger company, which they almost never do because they're already too big to be acquired. Companies that get acquired, they're usually in the millions, not billions. But if they do get acquired by somebody, the price usually goes up with that acquisition. So that's a good thing for us. It's not a bad thing. On the other side, if you're shorting something, which we're not talking about over here, but if you're shorting something, you want the capitalization to be as big as possible. Start off with at least 10 billion. But this is not about doing that. We'll have a separate video on shorting and why we do what we do. So far, we have a list of 17 pages. Is there anything else we can add to over here? Let's see. Technically, do I want to add anything to it? Maybe beta. So we want this thing to outperform the market. We don't want to be doing the same thing as the S&P. The S&P sucks. I mean, it returns 20%. You can make hundreds of percent per year. So we're going to choose something above one representing S&P 500. Okay? And we're just going to choose over two, meaning the price will move twice as much as the S&P would. And then all of a sudden, because of so many filters I've chosen here in the fundamentals, if I remove some of these, the list will be bigger. But just for keepsake, we have two, six, seven technical, or there's one technical, four fundamental, and two descriptive. And by doing those, and you can copy this and arrive at the same exact page that I'm looking at, we have chosen companies that you might be interested in. The list is a little short, so I will go back and I'll remove some of this next year. Let's see what that does to our list. That left us with one. I don't usually choose so many. Sales growth quarter over quarter, still one. How about nothing? And then just over 15. 2 pages. 2 pages is better than one. But so we have a list and we could go one by one and look at what it all looks like. But the way I like to do this, before I even dive into the fundamentals, uh, let's take a look at what these companies are, technically speaking, meaning I want to look at the chart. So you click on the charts here. And this gives you that whole list that I just had, the 2 pages. Now it's because it's a graph, it's 3 pages. So we have 3 pages of graphs. And what you want to see is a price that's going up, no? So let's look for it. This one's going up. This one looks like it's good. Nvidia. Nvidia's already expensive. This one's going up. This one's slowly going up. This one's definitely going up. This one's going up. And you see that some of these companies will be going up, some of them will be going down. None of that matters. We're just trying to look at potentially what are you going to be investing in based on what's already happening, and then we'll dive into the fundamentals and say that we've delved into the fundamentals ahead of time. This way, it's just a different way of getting the idea, but not the, I wouldn't just stop there. You have to look at the fundamentals themselves, and then we'll confirm with a different source to make sure that the data and the website we're choosing actually makes sense. Or sorry, the company we're choosing. So NXT, Next Power, Solar, Vasco, Victoria's Secret. Victoria's Secret's doing really well. Let's look at Victoria's Secret. All right, back. Sorry about that. So what we have is Victoria's Secret. Do I want to invest in this? Who knows? Now, since my go-to source is Seeking Alpha, and you can subscribe to these guys' service to get the same information, just in a slightly different format, or you can go with Koifin, whichever. These three are great: Seeking Alpha, Koifin, and Finviz. But we're going to go back to Seeking Alpha. Hold on, let's first get the ticker. VSCO. VSCO. VSCO, Victoria's Secret. Financials. Let's dive right into them. Let's decipher some things. The very first thing I usually go for is trying to figure out if this is a profitable company. And so, is the income rising? What you're seeing here is numbers in millions, 101 million, 109, 104. What I like to see is a nice steady increase. Seems like there was a little bump here last quarter there. What this is quarterly. Let's look at annual numbers. 22, 23, 24. It looks like their numbers are increasing year over year, but they're not really making that much money, honestly. Not like a tech company making money in the billions every quarter. Let's look at quarterly data. Net income. Nothing too stellar. Nothing too stellar, unfortunately. So let's go back to our list. I do like that price action, don't you? Maybe we should dive in a little bit further and see. Okay, let's go back to that. Total revenues. Income slowly rising, nothing too crazy. Earnings per share positive and growing. EBITDA slowly rising. Okay, those are all good numbers. Earnings reported all green last time, and we have March 4th post-market next report. Earnings revision. Over here, I usually look for upward revisions by the analysts. What you can see here is that on an annual basis, 9 analysts raised their outcome for whatever they're projecting, and on quarterly, 9, same thing as 8. Another thing to look at is profitability that I like to look at, and here's that return on common equity. And this company is at 31.42. Mind you, you can get all this information from Finviz as well. I just like this format a little bit better. Let's look at the performance of their peers. And this is a graph representation. So you can see Victoria's Secret, the orange, is up there with ATZ, a Canadian company, whatever that is, Aritzia. And you can click on that and go into information on Aritzia, Levi Strauss, VF, Etsy, Ultra Beauty, Victoria's Secret. They're all market cap, enterprise value, how many employees. The biggest company here is Ulta Beauty, but we're interested in Visco. Let's quickly look at Ulta Beauty. And just by clicking there, this website gives you that. But you see, Ulta Beauty 686. Who's got the money to put on this? I don't. I need to choose something with a smaller price that I actually can purchase a few shares with my small wallet. My investments are not in the thousands. Each one of my little pools is like $450. And I have 80 pools of money just scattered all over the place in the best and 15 some of the worst. I mean, because there's a long and short portfolio and then there's a long only. But I like Victoria's Secret still. Um, Whatever, man. Why not? Why not? Anything bad in news? Victoria's Secret earnings quality has significantly improved. A glamorous comeback in the making. Hold. Okay, Victoria's Secret brand is regaining momentum. Very good headlines. Price is reflecting the same. And if I'm going to be holding this for up to 6 months or more, why wouldn't I want a 200% return? Like from 20 in half a year, we're up to 60. And that's a pretty good return. So this is a company I'd be putting some money on and holding it on for a few months and see what happens. Uh, that's pretty much it. Let's look at another one. Go back to the tool Finviz. And like we picked it just by looking at this. So if I go back to my previous file, VRT, vertical equipment, their price is a 182. That's a little bit too much. I like to see that nice increase, straight line, and the price to be not in the hundreds because I can't buy that many shares. The opportunity is just simply not there. Um, NXT, $105. Okay, I could get a few shares for $105. But let's just go back to Seeking Alpha and let's look at their financials. Well, look at that income. Keeps climbing from small numbers to big numbers, and that's on a quarterly. I already like this. Earnings, yeah, green. Revisions, higher on the up the versus low. Profitability, 35. Another company I'd be interested in putting some money on, just based on looking at the price action and then following with the fundamentals and confirming that yes, that this is something. So I've already chosen two stocks just by looking at their charts because sometimes the stock might have stellar fundamentals, but the price action's choppy. It's all over the place. It'll be up and down, up and down, up and down, up and down. It doesn't go anywhere. Whereas if you can see over here, there's a significant trend developed, and you can jump onto that bandwagon. If you hold on for six months, you get 100% return. And that's just that. There you have two stocks. And by manipulating the screener, if I go back to the screener to my list, you could come up with some great ideas for trades. But you have to follow up with fundamentals and screen out all the garbage because there's like a lot of garbage. And I mean, if you look at the price actions on some of these, you can tell how garbage they are. This is nothing but price manipulation and whatever. But just by using this technical tool, you could get some crazy ideas out there. Now, there is a different tool that I use at Seeking Alpha, which is the quant rating that they have. And that's amazing as well, but that's a subject for another video, and I'll get back to that. For now, God bless you. Hopefully you've learned something today. Enjoy the video and stay tuned for the next one. Talk to you soon.